Good morning. Welcome to IG's early morning call. It's the longest day of the year in the Northern Hemisphere. It's June 21st. It's a Wednesday. Coming up in today's programme, we're looking ahead to the start of today's European session, looking for small rises across the board, but may not be so in London. We've seen sterling take centre attention this morning. We've seen some inflation data out where we've got core CPI rising to levels not seen since March 1992. All this as we await Jerome Powell's testimony to Congress today. This is pushing up the dollar, and we've got gold down near 3-month lows. And on the corporate world, Tesla overnight rising to levels not seen since September last year, or sessions on the IG platform late last night. We've seen Elon Musk talk about the investments in India, which he said must start as humanly possible. So let's take a look at what's happening with what's going up in the markets. And we've got the volatility down at recent lows, 1659. And it still means that risk assets are very much in amongst the mix. That being said, you can see here, we're back down at the 200-day moving average for the FTSE 100 at 75.50. And we are just breaching the 200-day moving average, so 200-day SMA, I should say, the simple moving average for the FTSE 100. We're just looking as though we could well get a crossover as well for the blue line under the red dotted line on the MACD. Now, if and when that happens, for someone that follows the momentum indicator, which is what this is, it means that that now then starts to bring about further likely downside in the markets as people sell out of their long positions. Now, there's a couple of things happening here. We'll go into some more detail in just a moment, but broadly speaking, the Bank of England starts its 2-day interest rate meeting today. And that could result in an interest rate rise tomorrow, as I'll take a look at in just a minute with the CPI numbers. It may not even just be 25 basis point interest rate rise, and that should certainly give some downside to the FTSE 100. So if you're short on this market at 75.50, excuse me, your stop goes above the 7600 level. If you're short going into the session, the cash session today, and you're short ahead of the Bank of England announcement tomorrow, which if you look at the things that are all adding up, it does mean the Bank of England almost certainly has to be ultra hawkish. Let's take a look at what's happening across the rest of Europe. The German DAX, now a little change on the cash, on the 24-hour markets, I should say, yesterday, looking for small gains at the moment at 16,118, and the French markets as well. We looking as though actually now the French market's building on a downside position at 72.77. So we do have some downside pressure beginning to build in the European markets as we go towards the start of today's trade. Quickly want to look at what's been happening overnight in the Asia Pacific markets. We are seeing the Nikkei up on the session by margin just over 0.5%, but pressure added to the Chinese markets, and the S&P ASX 200 also on the way down. Wall Street back yesterday after a long weekend. This is the end of the cash session yesterday ahead of the Jerome Powell testimony today, which he's likely to say that the Fed's really poised to continue to raise interest rates if inflation does not come down. And that's what we're getting from a number of different economies. And I think this goes back to the Bank of England and what the message will be almost certainly tomorrow. Let me just quickly give you a couple of charts and just to soak up what's happening. This was the trade yesterday. 24-hour markets actually saw a rise to the NASDAQ yesterday. 15,052 is where we are at the moment. Not too far away from the low point of the candle yesterday, but to be broadly speaking, really we're just waiting for that Powell testimony later on today. Insofar as the broader market is concerned, S&P 500, you can see pulling away from the recent highs, fourth day in a row now of losses for the 24-hour markets. Just want to pick up on what's been happening as well on that Nikkei 225 rising in today's session. We've got the Japanese yen on the way down. The Bank of Japan must ensure its policy does not fall behind the curve. This is according to a statement out overnight, or rather a comment of one of the 9 board members when discussing the Bank of Japan's April move, not the last move that we saw last week. This is the move previous, in the previous month. This is the minutes of that meeting out overnight. The Bank of Japan policymakers agreeing to keep ultra-low interest rates given ongoing uncertainties over the global economies. But it was noted that wages and inflation were already showing signs of accelerating, which means that they must surely have their finger poised over the tightening button to see what's going to happen. I want to take a look at the dollar yen because it's interesting in as much as it's bumping up against this line of resistance at 142.20. As I said, we've got a weakened Japanese yen in today's trade. This is represented by this stronger dollar. up at this level at 141.95. If we do get a candle close beyond that line there, intraday yesterday it reached 142.26. You get a candle close beyond there. Then there's not much stopping you all the way and then up to this line of resistance up here at 151.95, which are the highs we had back in October last year, which is when you'll remember that the Bank of Japan then started to step in to start to try and do something about this weakening Japanese yen. This is the dollar rising here, and then came the reversal after the Bank of Japan's intervention. Since then, we've seen positions build again for the dollar against that weaker Japanese yen. But it's all about other areas of the market, and it's about inflation. UK consumer prices continue to see upward pressure and applying upward pressure as well to the Bank of England, which starts its two-day interest rate meeting today. The headline consumer price index rising 8.7% in May year on year. The consensus had been for an 8.4% climb. Now, this arrests the downward trend in headline UK inflation figures, which have been falling after a peak of 11.1% last year. The Office for National Statistics says rising prices for air travel, recreational and cultural goods helping keep inflation high. Falling prices for motor fuel were the largest downward contribution. Prices for food and non-alcoholic drinks rising in May, but by less than we saw this time last year. But it's the core PCI, I think, which really steals the headlines, 7.1% year on year. Now, this is the highest since March 1992. The consensus had been for a reading of 6.8%. Now, this is a real problem for the Bank of England. Adding into this, got producer prices rising 4.1% of the year in June year on year. Retail prices 11.3% year on year. Look at sterling against the US dollar. Now, this is 5-minute candles. This was the initial reaction, pushing sterling up considerably. But bearing in mind, these are 5-minute candles in the grand scheme of things. It's not a massive move. But I want to show you this because I think it's really important to understand that people are buying the pound ahead of the Bank of England's interest rate decision tomorrow. What does the Bank of England do? Interest rates are 4.5%. There are wild, broad expectations we could well see another 100 basis points to 5.5%. I think there's some economists suggesting we could well see 150 basis points by this time next year or sometime in that period. Now that, as we've been hearing, would absolutely cripple many in the housing market, those that own properties, that have mortgages, that are coming up for renewal over the next year. It's likely they're likely to see enormous and in some cases completely unsustainable rises in interest rate payments. This goes for the buy-to-let sector, which are under enormous pressures because the way to make buy-to-let work is that you lever your profits against debt. And the debt that's been piling up is held in mortgages that start to become renewable. And when you renew a mortgage from previous lows, even just a year ago, some of these mortgages were 2.5% repayments, and now these are likely to rise to something like 6% plus repayments. And when you get that sort of incremental increase, it absolutely cripples the accounts on a buy-to-let account. And it means that people who are even in their own homes are having to find enormous amounts more to pay their mortgages. This is one of the reasons why we've got sterling up against the US dollar in today's session. It's not as high as it has been recently. In the last few days, we have seen it tip up over this Thursday, this 21st of April 22 level. But sterling is nonetheless on the way up. Let me just quickly reference what's going on with sterling against the euro. We're up in today's session at 117.60. So Bank of England very much having to face the consequences of the amount of money that's gone into the economy during COVID, the amount of money that went into the economy to help support businesses, to help support individuals. Now the government's talking about helping individuals on their mortgage payments. And some economists are screaming absolute pain. Do not do this because it'll just continue to fuel inflation. Let's look at other areas of what's happening on the markets because we've got some interesting moves for the Swedish krona. The Swedish krona and the euro have been battling out new positions. And as of yesterday, we saw a new record low for the Swedish krona against the euro. The reason why? It's all about interest rate differentials. Talking about inflation rising here in the UK, it's also rising across the eurozone, which means that the foot of the ECB is placed firmly on the pedal so far as interest rates are concerned. This is the chart here showing the euro slumping to a new record low against the euro on a combination of global risk aversion and expectations that the nation's central bank is close to wrapping up its year-long interest rate rising cycle. That's the Swedish National Bank. Now it is pushing the markets higher. In yesterday's session, we capped out at a record high for the euro against the Swedish krona at 118.162. And indeed, you can see in today's session, we've got another green candle there pushing that higher still. Bloomberg says the jury is out among analysts on whether further losses are possible. That's losses for the Swedish krona and rises for the euro, with both RBC Capital Markets and Nomura International seeing it ending the year around current levels. Now let's take a look at another area of the market, which is what's happening with the US dollar. I want to bring up a chart for the dollar basket just to show you what's happening there ahead of the Powell testimony today. It's the fourth day in a row of gains. The dollar has been losing a little bit of ground recently on hopes that the Fed might be done on raising interest rates. You remember last week we saw the Fed keep interest rates on hold. Since then, with more evidence of more inflation coming through on more economies, and I think this is now beginning to make people more alive to the possibility that the Fed's going to come back. We know the Fed's unlikely to cut interest rates this year, which had been the suggestion earlier on in the spring this year. It's now looking as though the Fed's got at least 2 more interest rate rises to go. But today's testimony from Jerome Powell before Congress will give a little bit more colour to what's happening. We're currently trading at 102.20 on this trade. How do you trade that? It's euro dollar, which is mostly made up of what's happening with the euro dollar trade. The dollar basket is mostly made up of the euro dollar. And we can see here this fourth day in a row of losses at 109.09. If you're short on this, going into the testimony today, your stop goes up here, probably above the 110 level. Actually, you'll want to put your stop loss if you're short on this market going into the decision or the announcement on the speech today from Jerome Powell. There's sometimes some little volatility going on around there, but I think the risks are certainly that we could well see some more hawkish rhetoric rather than dovish rhetoric, possibly from the chief of the central bank. Now, the other follow-on aspect to this market is then what happens to the price of gold. And you can see gold is responding with a loss. When you get the dollar rising, you often get money coming out of gold. The irony about this is the fact that gold is a hedge against inflation. Therefore, why are we not seeing inflation push up the price of gold? Well, we are seeing it push up the price of gold in sterling. We are seeing it push up the price of gold in other currencies. Currencies are losing ground against the US dollar. So you've got a currency problem when looking at the price of gold. But in dollars, at least, gold at the moment is trading down pretty much at levels not seen since the 17th of March this year, which is very close to 3-month lows. The price of gold at 1933. If you're short on this, as we've been talking about recently, your stop goes in this area up here at around about the 1990 level. This is the line of support I've been talking about at 1910.9, which is the 61.8% retracement on this Fibonacci move from the lows that we had back on the 28th of February. Let's switch gears and take a look at some of the corporates which I want to take a look at the moment. And Berkeley Group's come out with some interesting figures this morning. Let's bring up a share price chart for the FTSE 250 listed house builder. You can see here we're bumping along what is the bottom. I've drawn here this line at 38.76. 39.09 is where we're opening this morning. This company posted a nearly 10% jump in its annual profit. That, I think, is a little bit better than had been expected. The British high-end house builder reporting a pre-tax profit of £604 million compared with 551 this time last year. It's forecast a pre-tax profit of around about £600 million. But the point here, I think, is not so much what's happened in the past. The rearview mirror might look pretty good. But I think when you've got interest rates rising, when you've got inflation rising, when you've got people less able to afford the prices that these companies are wanting people to pay for their new homes, I think potentially there's the possibility we could well see this continue on its downward trajectory. Now, you can see in the last couple of days it's disappeared below this red line here, which is the 200-day moving average. We haven't really seen it trade substantially below that since the back end of last year. And I think that itself is also somewhat more significant. If you see a continuation of this drop down here, the next line of support to watch out for are the lows that we had here on this little hammer candle back here at 36.89. Down on the 19th of December. That would be the line of support to watch out for if you're short on this. If you are short going into the start of today's trade, tuck your stop loss in just a little bit above the 200-day moving average at around about the £40 level. 39.09 is where we open, and I'm wondering whether perhaps maybe we could well end up getting a trade below recent lows because of the potential outlook and the worry about inflation steering the Bank of England into what is likely to be an aggressive move on interest rates over the next 8 to 12 months. Let's take a look at what happened late last night in Federal Express shares, down around about 2.5%. Although we don't trade all sessions on the IG platform, I can tell you that there was post-market trade last night in extended trade, down 2.5%. Among the businesses that, of course, that benefited during COVID, people sending things around, wanting to communicate with friends and family and wanting to send things to people. FedEx didn't do too badly during that. Since then, the picture is very, very different for the sector. Consumers have returned to stores. Now shippers have to deal with high-end costs and the global economic slowdown. And to protect its margins, Federal Express has been cutting costs. Last fiscal year, FedEx slashed 29,000 jobs, retired 18 planes, and closed a number of offices. It also cut its Sunday deliveries. All this cut $4 billion in permanent costs by the end of the 2025 financial year. But this had a mixed effect on earnings and sales. You can see here coming in better than expected at $4.94 per share. Revenue was lower at $21.90 billion. In the new fiscal year, FedEx intends to carry on with cost cutting and now plans to ground something like around about 29 further aircraft it's got in its fleet. I want to show you the share price chart for Federal Express. FDX is the ticker symbol for this. As I said, it's not an all-session stock. So you've got to add a further 2.5% downside on from where we closed out last night. The group forecasts flat to low single-digit % revenue growth versus the prior year. Now that would put the range of adjusted earnings, excluding items, between $16.50 and $18.50 per share. Analysts had expected $18.31. So you can see the outlook is not as rosy as many had expected. And this is why we're seeing some downside potentially in what's going on with Federal Express. Tesla is joining the growing list of companies that want to start manufacturing in India. Elon Musk met with the Indian Prime Minister Narendra Modi yesterday in New York. And this is what he said. He said, "I'm confident that Tesla will be in India and will do so as soon as humanly possible." Musk said when asked by reporters about Tesla's plan to invest in India, adding he intends to visit the country next year. He says India has more promise than any other large country in the world. Modi, really cares about India because he's pushing us to make significant investment in India, which is something we intend to do. We're just trying to figure out the right timing in all this. Now, the Tesla Motors share price has been on an absolute rip recently, and it continued late yesterday. No sellers at the close at 278.10, striking highs that we've not seen in this market since September 2022. And it's not just Tesla. Musk also hopes to bring Starlink satellite internet services as well to India. So this is pushing up interest in Tesla shares. Now, let's take a look at one other stock I think it's worth looking at. Remember last week we were talking about Virgin Galactic, the company saying it was going to go ahead with its launch at the back end of this month. As we approach that, there's been some interesting trade in this share. It trades all sessions on the IG platform. I want to show you what's been going on. And in fact, yesterday, ending at levels not seen there since February this year. There had been some real concerns about the potential for all this, but now the company is coming through with a launch, subject to it being a successful launch, and we pray that that is the case. We also are very mindful of the tragedy that is befalling people at the bottom of the Atlantic as the rescue services try as fast and as quick as they can to rescue those poor people at the bottom of the sea in the submersible. You can see that in any direction you go in space or undersea exploration, it's a very dangerous business. So we hope that this launch this next week will be a success, and we will end up potentially thereafter seeing some further upside in this stock, SPCE, Virgin Galactic, one of the shares to continue to keep on watching as we see that space flight continue next week. That's it. We are back at 10:30 with Charting the Markets, and I want to follow up on what else is happening as well, of course, at the top of the hour with Berkeley Group. Be interested to see what happens with that stock. It's not about earnings, I don't think necessarily, which I said is in the rearview mirror. It's more about what's going to happen from here on in with inflation and the Bank of England tomorrow. And that could give a steer, not just to Berkeley Group, but to house builders at the start of today's session at the top of the hour.